the GDP was showing that productivity fell, limiting how much wages can rise without causing inflation. The GDP prices rose 1% quarter and 2% year over year, and the household savings ratio rose. But if you look below the hood, the truth is that the public demand, which is all, of course, the government spending stuff, has been rocketing higher. It's much, much higher than was actually forecast in the RBA modelling ahead of time. You can see there on that line. And another way of looking at it, this is the contribution to year-end growth. And you can see there that it's all about the government. It's all about what they're spending. And as a result of that, as Chris Richardson put it, the don't release specifically the living standards data, but the disposable income per head adjusted for inflation went up by 0.09% in the December quarter, and they're down 9.9% from their artificial COVID high of September 2021. So the reality is that without government spending big, massively big, we would have been in a recession. Now, okay, the inflation has come back a bit, and the most recent information from the Melbourne Institute did actually show that inflation has dropped back a little, and therefore there is perhaps the possibility of rate cuts coming a little bit, but not a lot during the year. But this is not good because it really doesn't set up the economy well for the future. And I guess my perspective on all of this is that the story of what's going on economically speaking versus what's being spun economically speaking is for me one of the really big elements that's worth thinking about a bit further.